what happened was rates shot up, and similarly to how banks found themselves in with all these, long-term bonds that were suddenly like completely, you know, losing money on. Well, these automakers found themselves with all these vehicles that are much more expensive than what people can afford. And so they did away with all the cheap stuff, assuming times will always be good. People will always have cheap gas, and people will always be able to afford these vehicles. But that is not the case anymore. And so now we're in for a very rude awakening because now automakers are saying, okay, what do I need to create for the market so that people can afford it? And I want to give you one example, Adam. Look at the Ford Maverick. I mean, this little, mini pickup truck. I call it like the Ford F-150 in like shrinkflation mode. It's like it's like a mini pickup truck. It's again, it's not a work truck. I mean, maybe like, like minor work, but this thing is selling like crazy, right? It's like an under 30 grand pickup truck. Sales numbers are, amazing. And so it just shows you like people need affordable. Affordable is the word of the year. Every dealer is thinking about it. Every dealer is concerned about it.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. If you're planning on possibly purchasing or selling a car in the near future, or just curious about how the latest action in the auto market is impacting your current car's value, you'll want to listen up to today's guest. We're fortunate to be joined today by auto expert and car dealership owner Yossi Levi, who will give us his latest boots on the ground reporting on the key trends driving supply, pricing, and lending in the car market right now. Yossi, thanks so much for joining us.
Adam, thanks for having me on again. It's great to be back.
Hey, pleasure to have you back on. Last time I interviewed you, which was for my previous channel, you were anonymous at that point in time. You were going under the moniker car dealership guy. Great to actually see what you look like. I love how you've upgraded the business. Love the new studio. We'll talk about your podcast in just a moment. But thanks so much for coming on here. I get tons of questions week in, week out from folks asking for an update on the auto market. So glad that we were able to get into your schedule. Why don't we just start at the very top? What's your current assessment of the auto market right now?
The current assessment of the auto market is what I like to say dispersion, or if, to use simpler terms, we've sort of hit this like K-shaped recovery that everyone was talking about in the economy, right? Let me explain. So today, as it stands, in the market, you have a tale of really two different types of brands. You have the brands that are sought after and are increasingly low day supply, maintaining margins, maintaining volume. And you have the brands on the other end where they may have increased prices too much over the last 3 to 4 years. Demand has fallen off a cliff, and margins are just declining, and the consumer demand is not there. And so you really have this kind of tale of two markets where the market is split right down the middle. On the left side, I would say, as you can expect, many of your foreign brands, your Japanese, Koreans, Toyotas, Hondas, Kias, of course, Porsche, and some of these really sought after luxury brands, they're just doing phenomenally. Supply is still at all-time lows, and margins are holding up strong. Consumer demand is stronger than ever. On the other hand, right, you then have brands like the Chryslers, of course, Stellantis, so Chrysler, Dodge, Jeep, Ram, Lincoln, and various others where they are just struggling. And they're struggling for many reasons. But it's always a function of value, right? Some of these brands, such as Stellantis, increased their prices as much as 50% since 2019. That's more than any other automaker in the market. They are coming back down now. They are offering more incentives now, but that's a long transition to reverse. And it's all of that. All that said, it's just created a very, very divided market where you have one side that is, doing well and another that is not.
Okay. So it sounds like there's a number of dynamics that are in place. One is just popularity of the brands, one is supply, one is how much these companies increased their prices in recent years. And I do want to give folks your assessment of kind of what happened during the pandemic and how that just sort of really jumbled up the auto market because it sent supply crashing and prices soaring. So I want to know if we've kind of fully recovered from that, if we're still feeling the after effects. But how much of this K-shaped recovery too is similar to the K-shaped recovery we're seeing in the general economy, which is where the wealthy and those who own assets, they're still doing just fine because stock prices are near all-time highs and home prices have held up. Where you're having, kind of the bottom, kind of 80-ish% of the population increasingly falling behind because their wages have not been keeping up with the spike of cost of living that we've been having. So is one of the factors why these luxury brands are doing well just because rich people can still afford to buy them, where with all the other brands that play to a more popular, common man audience, they just can afford less these days?
I would say somewhat. It's not fully analogous to, the broader economy. Just to run you through some stats, right? We are right now at 2.7 million units, new vehicles in inventory. That's 870 units above a year ago or 46%, but we're still 30% below 2019. But here's the kicker, right? The numbers I just mentioned are it's not fully proportionate over every brand. And so yes, we're only at this point 30% below 2019 in total inventory, but Toyota is more than 30% below, whereas Chrysler has, eclipsed their 2019 inventory. And so the K-shaped recovery, as we like to say, has really impacted, I would say, the automakers, where you have certain automakers that have, are really not doing well and they have to go through layoffs and price reductions. And then you have others that have just, played their cards correctly, have taken the right strategies, and they're the ones that are simply doing a lot better in the current economic environment. I'll also add that when you look at the average transaction price, it's still at around $48,000. And so while inventory has risen almost 50%, the average transaction price has not. And again, it comes back to a tale of two economies because you have certain vehicles that everyone wants and they're holding their value. And you might get them at MSRP, but you're not getting them below MSRP. And on the other hand, you have these vehicles that people don't want, that are just less desirable. Many of the domestic brands, frankly, nowadays, that's just a reality. And so those ones are either not selling, they have super high day supply, and they haven't taken the medicine yet. And the medicine is going to be continuing to increase incentives, continuing to reduce prices, right? Incentives are at I want to say 3.5 or 4 year high at the moment, right? Vehicle incentives. So manufacturers are waking up to the fact that they got to move metal, but we still are not at what I would call equilibrium across the board because you're still seeing these brands with day supply, which means, what is our inventory availability for the demand in the market that is way above industry average. In some cases, it's 2, 3 times more than your average vehicle in the market. And so we're still going through this kind of unwind phase for many of these brands, and it hasn't been pretty.
Okay, so maybe now let's talk about what happened during the pandemic, and then we'll bring it back to today's buying environment. So you can explain this much better than I, but my understanding is that first the pandemic shut down supply chains, and so there were just a lot less cars produced, and then everybody got the stimulus checks, and so consumers had more money in their pocket to spend on things like cars. And so you had kind of a perfect storm, right? Where you had,
Mm-hmm.
apparently low supply, apparently high demand. And I mean, it got to the point where like people were selling their used cars that they had had for, several to many years for a higher price than they had originally bought the cars from. We just sort of saw this
Correct.
stuff that just doesn't happen normally. Um, has how much of that has equilibrated? Like, are the supply
Yes.
chains fine and
Great
working? Are
question.
companies producing as much as they want?
Yes. All right. So I'll run you through a couple of things that are important here. You mentioned an important factor, which was we underproduced cars, right? So if you look at the last 3 years, we underproduced roughly 6 to 8 million vehicles. Okay. That's new cars that would have been sold. The average year in the car business, we typically sell 17 to 17.5 million new cars. Okay. We got as low as, I want to say 12.5 million 2 years ago, right? That's a meaningful drop in new vehicles hitting the markets. Now, that's one side of the factor here. And of course, that impacted prices where we saw prices rise anywhere between 30 to 45% between used and new cars over 2 to 3 years, right? We know that it outpaced inflation. It was bananas. We all experienced it. Now, what happened is along the same time, prices were, at record highs. People began holding on to their cars longer than ever as well. And so today, when you look at the average vehicle on the road, first of all, average vehicle on the road is at all-time high for age. It's at about 14 years. You're also seeing that the pre-pandemic average vehicle, which had 65,000 miles on it, today that average is 71,000 miles and rising every single month. And so people were faced with a situation that we all are, we all experience, which is, okay, what do I do now, right? If I have a car, amazing. I quote unquote made money on it, but you didn't really because you got to replace it with something. And if you don't, you got to pay more than ever. And so what happened was was an interesting scenario where people held on to these cars. And that resulted in fewer vehicles being returned to dealers. All right. Now here's where the entire system starts to go out of whack. Because when cars aren't being returned to dealers, what's happening? Your used car supply is dwindling. And so our used car supply dropped as low as roughly 50 to 60% lower than, a normal year over the last couple of years. Right now, we're still 15% lower than 21. It has been rebounding. But while the used car supply has been rebounding just through trade-ins and whatnot, what's surprising, or maybe not surprising, is that day supply has not gone up, right? So there are more used cars hitting dealer inventories now, right? We are at about 2.2 million used cars in dealer inventories today versus 2.6 million 3 years ago, but day supply has not risen. And so we're still not in equilibrium because if we were in equilibrium, as used cars would be returning to dealers, day supply would likely rise a little bit because that tells us that, there's, more supply and, demand is the same. So demand is rising with supply. But it gets even more interesting because remember I mentioned that we underproduced 6 to 8 million cars, right? Well, now we're approaching June, July 2024, which is exactly 3 years since June, July 2021.
Mhm.
And this is what we call in the car business as the leasing cliff. What happened was
Mm.
we were not leasing enough cars in 2021, 2022, and 3. The reason we weren't leasing enough new cars is because we weren't producing enough new cars, right? And so what's happening now is we're getting now to the point where those cars that would have been leased 3 years ago should be returned right now to dealers. And what happens when those cars get returned to dealers? Well, you get more used cars in your system. And the concern in the market right now is like, what's going to happen when my used car lease returns drop as a dealer, drop 60, 70% in 1 to 2 months? It's a real concern. And so the short answer is no one knows, right? Obviously, and it's going to have a very, it's going to put a lot of pressure on prices and maybe even push them higher. I would say at the minimum, it's going to buoy prices. It's going to slow down depreciation and, pretty much stabilize the used car prices. But at the maximum, it may even make them rise. And so it's a very weird time for the car market. We're going through these transitions. For anyone that thinks we're out of this entire mess from the last couple of years, not at all. Because that was only one side of the equation, right? Putting cars on the road. Now we're gonna feel the ramifications of what happens when you don't put cars on the road, what happens 3, 4 years later. And so, the consensus in the market is that we're gonna have a inventory constrained environment on the used side for the next 2 to 3 years at the minimum, after which it should, sort of subside. But it is going to be an interesting case study because we've never experienced a market like this where your lease returns drop by 70%.
Wow. Okay. So we are still seeing the echo effects, or to use a
Big
word I
time.
use an awful lot, the lag effect of some of these things that happened now 3 years ago.
Correct.
Okay.
Yeah. And it's going to last another 3 years. I mean, if you think about your lease term, it's 3 years. So, like we are going to have some deflationary forces from manufacturers that, of course, it's a free market. Everyone's competing. New and used cars are competing. And as new cars go down in price and offer more incentives, that's going to impact used as well, or at least late model used. But used vehicles over 4 years old, those are likely going to hold their value extremely well. And in many cases, we may even see a rise potentially. Which again, that's speculation, but it's not. It wouldn't be crazy if new vehicles rose again, or used vehicles rose again in price, at least the 4 year old ones.
Okay, so I'm pulling up here a chart of all used car prices here. So I guess it's used cars of
Hmm.
every age, every vintage. Um, but it shows that I think if I've got the stats here right, that we're down about 18% from the peak of COVID, where prices were just at their craziest. And I think we're down about 50% or so of the peak created by COVID, if you will. So we've retraced about half of the sort of historically aberrant trajectory that we were on. What I hear you saying is it sounds like you guys sort of in the industry expect this decline to start leveling off pretty soon for the reasons that you just mentioned.
I would tell you that it's tough to look at this in a vacuum or this graph. I'll tell you the flaw with this graph, right? What it doesn't tell you. It doesn't tell you that the decline you're seeing is primarily driven by electric vehicles and luxury vehicles. That's the biggest issue here. And even some domestic brands where, they're decreasing their new prices. But electric vehicles have really driven a big part of this decline, right? Your 3, 4 year old Toyota Camry has not lost much value. Your 3, 4 year old, Honda Accord has not lost much value or declined anywhere close to this much. This is driven heavily by used electric vehicles, which is why you're also seeing used electric vehicles in our market today as some of the best bang for your buck, right? Like if you are a used car shopper, used electric vehicles are actually some of the best value in the market. And a big part of it, especially if they're under $25,000, because then you're getting the tax credit, $4,000 from the government subsidizing your purchase. So, obviously that's subsidized by the government and whatnot, but that's the issue with this graph is that goes back to what I was saying earlier. It doesn't paint a really complete picture because yes, while prices on an aggregate are declining, it's very, very skewed and it's only specific makes, models, and vehicle types that are really driving this decline.
Okay, and I just want to make sure. So we're talking about the used market here, right? Not the new, but the used market. That dynamic is still the same.
Correct. It's the same. Yes. Again, you should really think like the new market and used market they work in unison. Meaning, again, mostly up to like 3, 4 year old cars, which is where the majority of the inventory is, anyways. But if you think about it, right, if Tesla drops prices 50% on new, guess what happens? The next day, you're a used car dealer. All that used car inventory just lost 50% of its value, more or
Right.
less. And so they work in unison. They work hand in hand. And if you want to predict, if you want to really get the best used car deal, then you have to first look at the new car market and ask yourself, okay, where are the best new car deals? And then, use that to your advantage on the used side.
Okay. All right. But I just want to make sure I understood the point you were making earlier about because there's going to be uh, a lot less cars getting returned to the dealers at the end of their 3-year lease, just because we had much fewer of them to lease back in 2021. That is going to continue to tighten inventory uh, on a lot of used models, and that could keep prices artificially supported until more supply comes
Correct.
back in, which will probably take years.
More supply or just less demand, right? If we hit a crazy recession and unemployment rises, then sure, there might be some less demand and that could, be deflationary to from prices. But yes, in a vacuum, yes, I mean, are all else being equal, sorry, yes, that's going to keep prices, artificially supported. Correct.
Okay. And I believe, and correct me if this is wrong, I believe at the height of the craziness during the pandemic, we were seeing a much greater price appreciation in the used car market than we were in the new car market at one point, just because people were holding on to their cars longer, and people were needing to buy a car. They either couldn't get a new car or new cars were too expensive. And so there was just intense competition for the much fewer used cars that were on the market.
Hmm.
Um, is there as big a discrepancy between the new car market and the used car market now? Are they more similar now than they were, or do they still have pretty important discrepancies?
I would say they're more similar. Again, it depends on the brand, right? If you look at Toyota, right, it's pretty similar how much used and new have gone up, anywhere between 25 to 35%, depending on the model. If you look at a brand like uh, Chrysler, Dodge, Jeep Ram, again, they went up 50% since the pandemic on the new side. The used side, the used side followed, but not as much, nearly as much. And so it depends on the brand, but they have functioned, in unison. And at some point during the pandemic, what drove the used car prices to rise more than the new car was clearly because you could actually get the used car.
Right.
And so it's simply, availability and timing. And so
Yeah.
people that did not want to wait 3, 4, 5 months, they were just willing to pay more for that.
And sorry to interrupt, but I remember at one point in time
Yeah, go for
hearing
it.
that it, that there were basically almost no new cars. Most manufacturers have been focusing on the bigger models, right? The trucks, the SUVs, et cetera, that have higher margins for them. And so at one point there were an incredibly few number of cars, like literally number of vehicles in the country
Hmm.
that you could buy for under, I can't remember what it was, $20,000 or $25,000 or something like that.
Yep.
So everybody who was wanting a car for a lower price like that was piling into the used car market because it's only where you could find cars like that. But because inventory was so tight there too, it was like a total feeding frenzy. I mean, they were just getting snapped up and prices were getting bid a lot higher. Have the manufacturers have they adjusted at all to try to provide any more economical models to folks in the years since 2021? Or are they still all just shoved at the very, high margin end of the vehicle line?
All right. So the short answer is no. They haven't adjusted anywhere near what the market is demanding. And let me explain this, right? So first of all, no vehicles are now transacting below $20,000, like zero. And that's an all-time record, right? There are vehicles with MSRPs below $20,000, but the average transaction price across the country is above 20. The few vehicles that were still transacting below 20, the Mitsubishi, I want to say Mirage and the Nissan Versa, they're not there anymore. It's above
All right.
20.
And sorry, just to be
So
clear, we're talking about the new car market here, right?
we're talking about the new car market, correct?
Yep.
All right. Let's just start there. Second thing, when you look at the total makes and models that are available below $25,000, that's also at an all-time low. And so what happened was, if I had to sum this up in a sentence for you, is that we were, from the 2010s was a decade of just, low interest rates, right? Everything got cheaper or rates went down and financing was a lot less expensive, right? What do these manufacturers do? They realize that people will buy these more expensive cars, trucks, afford more, luxuries, right? They can afford it. The monthly payments there, I can buy it. All of our automakers spent a decade building more more expensive, bigger, more luxurious, and the American consumer simply got hooked on that. And so if you look at the 2010s, right, we pretty much did away with, like some of the most significant sedans in the market. I mean, look at Ford as a great example of a brand that completely did away with its sedans. Remember the Ford Taurus, all these vehicles, like gone, right? They
Yeah,
went for
they
trucks.
don't make any cars, any
Any.
sedans, right? It's all
Done.
trucks, right?
None. None.
Trucks and
Right.
SUVs.
Now that worked in a ZERP environment, right? 0% interest rate. Great. Yeah, why not? Or a low interest rate. Sure. Now that's been inverted on its head. And I think that, by the way, I think the pinnacle of all this was Jeep coming out with the Grand Wagoneer for like over $100,000 like 3 years ago. Which, by the way, my wife saw one the other day and she was like, "I want that," and I was like, "Are you kidding me?" Like I've talked about this vehicle, how it's like so not it doesn't make sense financially, and now you're telling me you want one. Like I can't do this, but that's a different story. But in all seriousness, like that was like the pinnacle in my mind, right? You saw a Jeep, and I get they try to rebrand and blah blah blah, but you saw a Jeep for $105,000. I'm like, what? Anyways, what happened was rates shot up. And similarly to how banks found themselves in with all these, long-term bonds that were suddenly like completely, you know, losing money on. Well, these automakers found themselves with all these vehicles that are much more expensive than what people can afford. And so they did away with all the cheap stuff, assuming times will always be good. People will always have cheap gas and people will always be able to afford these vehicles, but that is not the case anymore. And so now we're in for a very rude awakening because now automakers are saying, okay, what do I need to create for the market so that people can afford it? And I want to give you one example, Adam. Look at the Ford Maverick. I mean, this little, mini pickup truck I call it like the Ford F-150 in like shrinkflation mode. It's like it's like a mini pickup truck. It's again, it's not a work truck. I mean, maybe like, like minor work, but this thing is selling like crazy, right? It's like an under 30 grand pickup truck.
I don't
And
know if I've
again, it's
seen
because
this, but is it like the modern Suzuki Samurai, like just a tiny little shrunken truck?
it's like it's in the middle. It's not, it's not that's what it's not like, F-150, but it's in the middle. But the
Yeah.
point is it's like a Toyota Tacoma-ish. But long story short is like, it's selling like crazy. And sales numbers are, amazing. And so it just shows you like people need affordable. Affordable is the word of the year. Every dealer is thinking about it. Every dealer is concerned about it. And I think the only thing that can save us, it's not 96-month loans. I think the only thing that can save the car business is leasing. That's just a reality. I think that's what's going to help, the consumer afford the vehicles that are available on the market today.
Okay, so let's now head over into that direction. So we've all heard the horror stories over the past couple of years of the crazy leases that people are taking on their cars. Yeah, I personally think there's a lot of people, just given how poor financial literacy in this country, there's a lot of people that are buying cars, not really sitting down and really doing the true math to realize how much they're going to be stuck with paying with this car. But we've heard of, basically four-figure monthly lease payments, right? Um, uh, at one point in time over the past year or two, when I've talked to car experts like yourself, they were raising warning bells of just, massive incoming waves of defaults on auto loans, and we are beginning to see the default rates go up in auto loans. Um, how before we get to what's going to need to change in leasing to make things more affordable, what is the current state of the auto loan industry? Is it in danger or is it doing okay?
So we're seeing delinquencies rise across the board. And I believe it's the 60 plus day delinquencies that have eclipsed 2019 levels. So there's definitely some, challenges rising in the lending side. But there's a couple things here that are important to note, right? First of all, deep subprime lending has been just dead, like under 1% of loan. I mean, significantly under 1% of loans for the last roughly 1.5 to 2 years already. So the first thing that happened with these banks is they said, okay, we're cutting out deep subprime. We're not lending to, 550 and under credit scores. That's the first thing. The second thing is lending in general. And even if you look at like auto credit availability, has just gotten a lot tighter over the last couple of years. It's been floating up and down for the last 6 to 12 months, but for the most part, it's gotten a lot tighter. There was a wave that I was highlighting in my data about a year ago where you just saw consistently every month another bank was pulling out of the car business, another bank was tightening, loan to value ratios were coming down. I mean, the banks got very serious very quickly, and they also had to because the big drop in vehicle values happened in 2023, right? In 2024, we've sort of been on a more of a linear traditional depreciation curve. 2023, we took the medicine, right? Dealers found themselves, losing lots of value on inventory. So all in all, what I have to say is that lending, and we could dig into the numbers. I don't have them in front of me right now of the specifics with every different cohort of consumers. It's not right now. Lending is it is getting it is performance is deteriorating. It's not in crisis mode. And I would define crisis mode as, we're going to see influx of 20-30% repossessions over the next 3 to 6 months. Like, I don't think we're there anything close. I think the real driver behind the fact that we're not seeing stuff like that is because simply that unemployment is still incredibly low, relatively speaking. People have jobs, and people are still can afford their vehicles for the most part. Clearly, we've sucked money out of the economy over the last 1 to 2 years, as after or 1 year at least, after putting all this money into the economy, and disposable income is down, household savings are down, and so that has had a negative impact on loan performance. But from what I can tell you, from what I'm looking at, and I look at the data pretty regularly, I haven't seen yet a stat or a number that makes me overly concerned, although the trends are not pretty. And so that's what I would preface it with, that we should follow the trends of 60 plus and 90 plus day delinquencies, in the subprime categories. We should follow that stuff because it's not trending positively, it is trending negatively.
Okay, so what you're saying is not in crisis yet. The trajectory is concerning though, and if we should have something like a recession comes along that impairs people's ability to make their car payments, we could fall into that,
Yeah.
huge surge in repossession, the fire and brimstone, crisis that you would be more worried about.
Yeah. And look, I think that if you look at what I just mentioned earlier, which is that used supply is up, over, quarter over quarter, year over year, yet day supply hasn't moved much in the last couple of months,
Mhm.
which again tells me that the market is still craving more used cars and that we're still not at equilibrium, or else day supply would rise, or at least the right vehicles. That's important to note, right? The right vehicles, we're still in short supply. But there is one major issue which has been plaguing dealers, and it's just like it's consumers being out of equity, right? Underwater under loans. That is a big issue. And there's some stats on this as well. I want to say Edmunds put out some good information on this the other day, but the consumers in negative equity right now is, as you can imagine, is at a 4 or 5 year high. Right now, why is that important? Well, that's important because increasingly you have consumers that again can't trade in these vehicles. And if you're a consumer, you've had a vehicle for 3 to 4 years, maybe you need to upgrade, maybe the vehicle, has some expensive issues to repair, and you can't trade that in. Well, guess what happens next? You either A, hold on to that vehicle and try to make it work. B, you may, get it repossessed, literally just, voluntary repossession as they call it, right? Let's say, hey, I can't make payments on this anymore. C, commit insurance fraud, right? Insurance fraud rises in tandem with these types of trends because now people are like, how do I get rid of this vehicle? So there's all
And
these
sorry,
hosts of like second.
insurance fraud being like set the car on fire or deliberately crash it?
I don't condone it. I don't know how people do it, but yes, pretty much you look for ways to get out of this vehicle if you need a new vehicle or if you want a new vehicle and
Leave the
you're
car in a bad section of town with the keys in the
it could
ignition.
happen. That could happen. So, but in all seriousness, like you see insurance fraud rising and like all these things, they go in unison. And so it's just, you look at it, you say, wow, and by the way, insurance premiums up 25% year over year.
So
Go
that was
ahead.
my next question. So we've seen in the housing market the same issue where prices have remained high, right?
Yeah.
Inventory has remained lower than expected. But the costs of home ownership have really ballooned, right? And insurance has gone crazy. Maintenance costs have gone crazy. So, even though you're saying people are kind of hanging in for the time being, are they indeed seeing a big spike in the costs of car ownership in terms of insurance, in terms of, hey, if I bring this thing in to get repaired, it's like 30, 40% more expensive than it would have cost me 4 years ago?
In auto insurance premiums are up 25% year over year.
Just in one year.
25%.
Jeez.
In 1 year. Right now, auto insurance, I've been reading a lot and learning and just speaking to people about how insurance, and how that works and pricing. And so, there's rates, there's a lagging effect, right? So it's a very laggy thing. They look at, prior year, prior months and all that, and then they come up with rates, right? But what happens is if you look at, again, the last 2 years, right? Cost to repair, all-time high. Cost to replace a vehicle that's totaled, all-time high. Just in the last 2 months, the average repair order at a body shop in America eclipsed $1,000 for the first time. That just happened now,
And
right?
sorry to
So
interrupt, but
all that,
is
yeah,
that because the inputs, like the actual parts and stuff, are getting more expensive, or is it wages, that wages have gone up and that has to be factored into the
everything.
repair bill?
It's parts. Parts are more expensive. Parts are taking longer to arrive. They're more expensive. It's wages across the board. Wages have gone up, as have labor rates. All right, there's some dealership around the country at $300 an hour labor rate. That's a record.
Wow.
And it's also technology, right? More sophisticated vehicles, EVs, the rise of EVs.
Yep.
You need all these new fancy tools. Dealers are investing a ton in their facilities. They have to. So all three of these things have really impacted it, right? So all that goes into auto insurance, plus the rise in theft, which has also hit. I want to say last year we had about like 1.1 million vehicles stolen. That was up from about 1. or 1 million and like 30,000 a year before that. So like all these trends, everything's culminating, right? More theft, higher wages, higher this, higher that, parts cost more, the vehicle costs more to replace. Guess what happens? Mr. Adam Taggart gets a bill in the mail at the end of the month that, oh, by the way, your insurance premium now is up to, or it's, you need a new car. It's 25% more to insure that year over year. That's the end result.
Okay, so I mean, I got to assume that that's sort of like a gravitational force on car prices. The question is it being fully expressed in the marketplace yet or not? I mean, again, the chart I showed, it sounds like overall prices are coming down, but do you think that it still has more lag to effect on prices here?
I don't think it's impacting volume as much, right? Again, the new car sales rate, it's called SAR. It's at about 15.5 million trending. It's still below 17 million from, 3, 4 years ago, but 15.5 is pretty strong. I'll tell you where this is all manifesting. Two things. Number one, margin compression. So dealers are not losing deals. They're making a lot less money on deals, right? Consumers can't absorb any more price hikes. And so consumers are, I mean, it's pretty much what's happening is dealers are taking, smaller deals. And so dealer margins, ready for this, are down 25% year over year.
Jeez.
Now, it's not all doom and gloom, right? The margins are still up from 2019. I want to say 35 to 45% at the moment. And so margins are still higher in aggregate versus 2019, but year over year, they're down 25%, right? So that one way this all manifests is simply dealers are, taking slimmer margins. And then the second way, and again, I mentioned this earlier, but this has been sort of the savior here, is leasing. Leasing is rising like crazy right now after hitting a low during the pandemic. Leasing traditionally was, well, it depends on what part of the country you're at, but leasing could comprise one in every three vehicles sold at the dealership. If you're in the Northeast or like the Southeast, it could be two out of every three vehicles. Now it seems like leasing has been consistently two out of every three vehicles sold at dealerships. I'm talking about like very recently, like last couple, you say 3 to 6 months. And so the beauty of leasing is you can get a vehicle with a payment that's like, 15 to 25% lower than what it would cost you to buy it.
Mhm.
And so more people are opting for leasing because at the end of the day, you need that car. And if you can save some money, you may have wanted to buy it, but it's just not worth it in this economy. And so you just say, hey, I'm going to lease it, use the car for a couple of years and return it. We could argue why that's good or bad, but I think that is really the product that has been saving the car business up until now.
So that's another uh, similarity between the auto market and the housing market, where right now the economics are favoring renting versus owning right now. And look, I'm not going to get on this bandwagon, but there's a lot of people that rail against that. What is it? World Economic Foundation, you'll own nothing and be happy. It does seem like we're
Yeah.
increasingly becoming a society of renters, whether it's our house, whether it's our cars.
Correct.
Okay, different conversation for a different day, Yossi. All right. So let me just ask you this. We've seen a lot of incentive by the government provided to have manufacturers produce electric vehicles and consumers buy them. You mentioned some of the rebates earlier that the government gives to electric car buyers. Um, I'm no expert in your industry, but I think I've read some articles showing that there is beginning to be kind of a consumer backlash is too strong of a word, um, but a pushback against electric vehicles for a whole variety of reasons. And I say this as a guy that drives, well, what's maybe the third category, which is the hybrids. And sort of what I've
Mhm.
heard is people have said, hey, electrics are challenging because they're more expensive. They're definitely more expensive to repair. They get into an accident, and sometimes a minor accident can total an electric vehicle the way that it wouldn't internal combustion engine car. Um, uh, with the increase in electricity prices and when oil was back down to at least $70 a barrel not that long ago, people were saying, hey, the economics are actually now favoring the internal combustion engine car. We've heard that the electric vehicles don't start in the snow. You've got range anxiety. You've got a lack of charging stations in your area. Like there's just a lot of things that people are saying, I jumped on the electric bandwagon, but now I'm less enthused about it. I've
Hmm.
heard that Toyota, who really didn't get much into the actual full EV market and has invested more in continuing to evolve the hybrid model, that seems to be where people's interest is now migrating. Is everything I just said relatively true?
Everything you just said is very true. Hybrids they've just passed full battery electric vehicles in market share, so for new vehicles sold. So hybrids have been on a tear. Toyota took a very strategic bet. They said, we are going to focus on hybrids. We're not going to jump into, the EV game. We're going to, we're a global auto retailer. Like, we're going to play it slow, very strategically. And they invested in our hybrid technology. And I think what we've proven now is that the early adopters of electric vehicles, have sort of that, that cohort of consumers has bought the EV, and now we're at this point where there's really been a slowdown. It's sort of plateaued. And so you see like all the EV, first of all, Tesla is, up there, of course, the pinnacle of EVs. Their market share of the market is about 50% of all EVs sold. But they've plateaued and, they've been lowering prices and they've launched marketing and stuff like that. And again, their sales have still been declining. But then when you look at the legacy automakers, it's even worse. I mean, their EVs in many cases are barely moving, crazy incentives. I mean, government tax credit, you can tack it all on, it's not selling. And so I think what the automakers are realizing is that, okay, we have not listened to the consumer, right? We have shoved too many EVs down too many people's throats too fast. People want hybrid, right? Some people want EVs. Listen, I think EVs are great. And I think they're great for specific customers. And I think it's a good part of a healthy economy. But you need to listen to your consumer, right? Any smart business listens to their consumer, and a lot of the automakers did not. And now they're facing the ramifications where they have these units that are not moving, right? They're overpriced, right? They're producing them in extremely expensive ways. They can't even compete with Tesla on the margins. And so it's simply, we've gotten to this point of reckoning where the whole EV market is sort of regressing while the hybrid market is rising. Consumers love hybrids, more fuel efficient. And, it alleviates those typical consumer pain points that many feel like, range anxiety, where am I going to charge and blah, blah, blah. But I think all in all, look, I would tell you, I think EVs are still going to grow. I think that this is a bump in the road. I think it's a secular incline from here for sure. I don't know, what is like, I don't know what's that like, terminal market share, whatever you want to call it. Like, I don't know where we get to. If today we're at 7%, I don't know if we get to 15, 20, 30, 50%. I don't know what that looks like. I also don't know how many years that's going to take. What I know, Adam, is that the automakers are finally starting to listen to the consumer, and they know that the consumer wants hybrid for the most part. And that is what is driving sales today. And that is where we're seeing sales rise the fastest. And there's a reason why Ford recently announced that they're doubling down on their hybrid strategy because they see the success of Toyota and they've woken up to the fact that this is what the consumer wants right now. And maybe that's going to change in 3 to 4 years, but today that's what the consumers want.
Okay, so you expect the other major manufacturers that haven't been on the hybrid bandwagon the way that Toyota has to get into it more in the coming years.
100%. 100%. I mean, again, it's all if you're, at a certain point as an organization, I mean, if you're not listening to your customer, you have to listen to your customer because that's where, you got to make money. And so if it just makes sense, it's not some conspiracy. It's actually just, black and white economics. That's what consumers are buying. That's what you need to deliver.
All right. Well, I will say, having been maybe inadvertently a little bit out in front of this trend, uh, my wife and I have been Chevy Volt owners for a good while now, and that's Volt with a V. And it was funny when we bought the one that we currently have. I think it was like a month after we bought it, Chevy announced that they were discontinuing, that vehicle line, and I was like, oh, wow, it's already a collector's item, I guess.
Yeah,
But I
I remember that.
really appreciate the versatility that that type of hybrid model offers. And yeah, haven't ever second guessed it. So I can understand why the market's heading that way. Okay, so as we begin to wrap up here, Yossi, What's your advice for somebody looking to buy a car right now? And I'm going to ask you about someone looking to sell a car in just a second. But what would your advice be to them? And I'm going to ask you that question. I'm sure you get asked a zillion times, which is like, all right, if someone's going in to buy a car, you own and operated car dealerships. What are some best practices that you would give them as advice going in to try to get the best deal?
Yeah, look, so I think it depends what you're optimizing for, like as a buyer. Like, do you want, just the best price? Do specific model, blah, blah, blah. But what I would say is, look, where you're going to get the most kind of discount right now in the market, and you could argue if it's truly more value or not, but it's just going to be on the used electric vehicles, right? They are below 25,000. You get a used EV that is, a couple years old or something. That's and you get the $4,000 tax credit, assuming you qualify for. I mean, that's just where you're going to find the most value in the used market, and where you're going to get the lowest price. You might get it net under 20 grand, for a 3 to 4 year old EV with decent miles. So you're going to find the most value there. Secondly, I would say if you're not looking for an EV, just track the new car market, see where you're seeing the biggest discounts on new cars, and then look at the used car market because that's where you're going to have that's ultimately going to flow through to the used car market as well. So that's what I'll tell you on the used car side. Secondly, you mentioned going to shop at a dealership. You know, I think that there's all these consumer buying gurus online and all this whatever, all this blah blah blah. I think at the end of the day, truly the best way to get the best experience, the best deal is if you in advance go on a website like Dealer Rater, which is rates a bunch of dealers, but it actually lets you rate the specific person you worked with. Don't just go to a dealership cold. Don't do that. Just find who is the top rated salesperson at the dealership, right? Like numbers don't lie. If there's a dealership and let's say they have 20 salespeople and like one person is number one, there's a reason they're number one. Maybe they help their customers get the best deals. I mean, I don't know their exact reason, but I just think that's always the best advice. It's like, dealers are smart. It doesn't have to be like a contentious experience. And I think that, many dealerships are not that way anymore. There's always some that will be and linger, but I think that if you as a consumer want just the best experience, you want to get best deal, just find the best rated salesperson there and, read the reviews why they're the best. And that's typically a very good strategy that people make out very well when going to the dealership.
That's really interesting. I actually didn't know you can do that. So you can go
Yeah.
online and say, look, I'm thinking of buying a car from this dealer. You go on to Dealer Rater, and they will tell you the actual salespeople in that dealership. And so you can read reviews on each of them and then pick. Okay, great. And
You can
it's just,
read reviews and choose whoever is the best. And that way you don't just go and, the guy that happens to be available and, maybe is new and not as well trained and you don't have to deal with that. Just find the best person, start doing it in advance, right? Start the process before you get there and then you get there and it's a smooth and easy, quick process.
well, and it's sort of the same thing with a realtor or with a doctor, right? Which is if they've if they've been in business long enough to develop a successful history and they have people that are saying, oh, I'm a really pleased client of theirs, um, you don't get to that stage if you're A, bad, or B, screwing your customers, right?
Yes. Correct.
Okay, okay. All right. Hey, one question just on you said the best values right now in the used car market are the used EVs. Um, sometimes people will balk at the thought of, hey, how long do these batteries actually last for? And if the battery has to be replaced, that can be super expensive. And some of these cars that don't even make the battery anymore, apparently. Um, how much of a worry would that be for you?
I think it's a worry. I don't think we know just yet, the long-term kind of battery degradation of all these from all these vehicles. I think we are getting to that point now, right? Like think about the rise of EVs like 2014, 13, 15, like those were, meaningful years. And so I think we're going to learn a lot over the next 2 to 3 years. I myself don't even know. I can tell you that as someone who's been in the car business and auto retailing for, close to 14 years, I would first of all, I would definitely, I think driving an EV is a phenomenal just driving experience. Especially if you're doing like local trips and stuff like that, I think it has, a room in many households in the US. I would lease. I would not buy personally. And I'll tell you why I would lease. A couple reasons. Number one, I don't want to, I don't know what the future of this technology is. I just, I don't want to be holding that bag. But also, if you look at the price volatility over the last year, it's been mostly driven by EVs, right? Where have EVs gone up and down in prices like so quick, rapidly? And I just wouldn't want to take that risk as a consumer. Think about it. Like you fight so hard to save like $1,000, and suddenly you buy a car, its price is slashed by $5,000, and you just lost 5 grand. So like I don't want to be holding the bag personally. And so if I'm driving an EV, I'm leasing it. I'm not buying it. And so I think that like, I don't know what the battery is going to be like long term. I don't know that, how these are going to function long term. To be determined. We'll see how that works out. But it's going to be interesting because we're getting to that point right now.
All right, so just to qualify your earlier advice, best values are found in the used car market on the EVs. Look at like a 3 to 4 year old EV, but consider leasing.
Correct. Consider leasing. Well, consider leasing for new. Used, it depends on, the dealership, what if they offer a leasing program. Definitely on new though. If you're buying a used EV, or if you're looking at the used EVs and trying to get the tax credit, like you're going to be buying it. You've also that vehicle is also taking a big chunk of the depreciation already over this first 3 to 4 years.
Yep.
So you're in a bit in better shape. I was referring to, but when it comes to leasing, I'm referring to new.
Okay. All right. All right. So then the last question here before we wrap up, similar question about sellers. If someone's thinking about selling their car, what general bits of advice do you have for them given the current market environment?
I think just shop the market. Um, you know, just get a couple offers. That's really always the best offer. There's a lot of dealerships nowadays will just give you an offer online. And so, of course, there's the big companies like the CarMax, the Carvanas, which, they'll all give you a price online, but also dealerships. I mean, everyone has this technology at this point. And so when it comes to selling your car, it's super easy, right? Because you're not getting a product, you're getting a check. And so just shop. What I will tell you is that during your shopping process, think about like who would most benefit from your vehicle, right? So if I have a unique Lexus as an example, right? A Lexus dealer will probably pay me the most for that vehicle, right? We call this in the car business the best end user. And so and there's actually some tech out there that's working on automating all this for consumers, which will be very neat. But think about like what vehicle do you have, right? If you have a Nissan Altima, like it doesn't matter. You just shop that, go anywhere because that's not like a unique vehicle. But if you have like, maybe, I don't know, like an F-150 that is, like a Raptor or whatever, right? Who's gonna be the best end user and then go shop there. So I would go to a Ford dealer and say, hey, I have this Raptor. What can you give me? I can almost guarantee you that all else being equal, they will pay you more than the Chevy dealer down the street and the Nissan dealer down the street. And again, there's exceptions, but it comes down to best end user. So shopping, 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 that's in your best interest.
Okay. And I mean, I know you've got a car dealership background, but shopping, 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 I assume also just put it out there on I mean, I'm such a dinosaur. I don't know if Craigslist is still the predominant way in which people sell cars in the private market or whatever, but see, especially if you've got that maybe a little more unique model, that there's not an enthusiast somewhere that just wants to come to your home and write you a check.
Yeah, I invested in a company. I don't do this myself, but I invested in a company called privateauto.com. And they've essentially built like the transaction layer for private car buying and selling. So over the weekend, you can literally sell a car, a private party, have the money transferred and everything over the weekend, by the way. They do like all this banking themselves. And it's done completely online. So they've really revolutionized private car buying and selling. And so yeah, pretty excited about this company in the future of, how people can buy and sell cars.
Okay, privateauto.com.
Yeah.
Okay, great. All right. Well, look, Yossi, this has been super enlightening, great visibility into what's going on in this crazy world of autos. Let's hope that the trajectory, the concerning trajectory that we're seeing on, auto loan defaults and stuff like that begins to head in a better direction. Would love to have you back on again later in the year, just to give us an update. And obviously, if something changes in between now and then, where you see some, key dynamics shifting in the market, got an open invitation to come back on the program.
Adam, appreciate it. Always a pleasure.
Right.
It's fun
Well,
coming on this show because it lets me brush up on all the latest data. So it gives me an excuse to get really, really close to the data. So this was super fun. Thank you.
well, good. Well, thanks for all the prep. And Yoshi, in closing, for folks that would like to follow you and your work, folks want to stay on top of this market more than just your occasional appearances here on this channel. Where should they go?
So you can find me on X, you can find me on LinkedIn. I mean, really all the social platforms, car dealership guy. Actually on X, I'm at guy dealership. I will tell you though, if you just go to dealershipguy.com, right? Dealershipguy.com, I am building a vertical media company. And so we offer CDG News, which is daily automotive news. We offer the number one automotive podcast, automotive retail podcast called the Car Dealership Guy podcast. All that is on dealershipguy.com. And so if you want to learn about the car business, you want to learn about the ins and outs of dealerships, how they work, the money behind them, how people are compensated. I mean, everything. That's what I do my work to uncover while sharing the latest and greatest industry news. It's all on dealershipguy.com. Check it out.
Fantastic. Yoshi, when I edit this, I'll put up the link to the URL to
Appreciate that.
dealershipguy.com right on the screen. Folks, I'll also have a link in the description below the video too.
Amazing. Thanks, Adam.
Yoshi,
Appreciate that,
it's
man.
always been great. Folks, if you've really enjoyed
Yeah.
this, would like to see Yoshi come back on the program soon, let him know by hitting the like button and then clicking on the red subscribe button below, as well as that little bell icon right next to it. And obviously, buying a car is a big financial transaction, shouldn't be entered into lightly. If you'd like some advice for that, feel free to talk to one of the financial advisors endorsed by Thoughtful Money. You can talk to them for free. To do that, just go to thoughtfulmoney.com, fill out the short form there, sign up for the free newsletter while you're at it. Last question for you, Yoshi, as we wrap up
Go
here.
ahead.
I've been asking this a lot of my guests recently. Clearly, you're a little bit more younger than my average guest age, but you're clearly very successful in your industry, building a great multimedia company there. What's one big lesson that you've learned so far along the arc of your career that you think is worth sharing with the audience?
Adam, there's too many lessons, so I just goes through my mind so many things. What I would tell you is specifically with Car Dealership Guy, like I said, we're the fastest growing automotive media company today in the market, over 120 million impressions a month, and that's all been done organically. And I think the lesson there I would say is you have to really follow the audience and the market and keep testing to find what people value, right? And what that means is that to be a content creator, right, you have to always ask yourself, what do people want to know about? What do I know? What is something unique? What is a unique insight that I have access to that I can offer to the market? And I think I think that's the key to creating, compelling content and to building a media company. And so I would just say, follow your interests, not follow your passion, follow your interests. Because if you're genuinely interested in something and you can offer a unique insight into the market, I think you can create a very high quality piece of content. And when you take that and you don't monetize it very quickly, which I think is a mistake a lot of people make, right? Like keep a low overhead. Don't monetize too quickly. Take your time, right? You can really craft something beautifully and organically that people will appreciate. And that's sort of been the model I took. I spent 2 years creating content every single day, 7 days a week. No excuses before I even asked for a dollar. And that allowed me to build a massive audience with a lot of, authenticity and create a very influential media company. So that's just, from the media perspective, but it just comes down to what do people want to know? How can I bring that value to them? And then while you're at it, don't run to make money. Like don't, wait on it, build it, and it'll come over time. So that's my advice among millions of other things I can think of.
Well, as someone in the media and content creation business, I can validate everything that you just said, and I think you and I are cut from a very similar cloth in terms of how we approach all this. So it clearly shows in your success. So congrats, and folks, those are words of wisdom. And to Yoshi's main point there, which is to create great experiences, great audience experiences, it takes two things. It takes the creator to really listen, and just to bring this to Thoughtful Money. Folks, I do my absolute best to do that. But it also takes the audience expressing what it would like to see more of. So folks, please continue to hit me up in comment sections here at YouTube, direct emails to me, etc. I listen to every submission I get. So if you've got a preference, if there are things you'd like to see done differently, done better, whatever, please let me know, because I am listening, and that is the way in which this will get even better over time. Yoshi, it's just been a total pleasure. Thanks so much. Look forward to having you back on again soon.
Thanks, Adam.
Everybody else, thanks so much for watching.